Hello, everyone. Thank you for joining us today for EEA's Education Series SIG. Today, we will discuss breaking down the blockchain tech stack for enterprises. Everyone is in listen-only mode. However, you are encouraged to ask questions by using the question box on your control panel. Today's call is being recorded and will be available for all attendees soon after today's presentation. The Enterprise Ethereum Alliance is a member-driven standards organization whose charter is to develop open blockchain specifications that drive harmonization and interoperability for businesses and consumers worldwide. We welcome any and everyone to join and become a part of the global community. At this time, we are pleased to introduce the solutions architect of ConsenSys, Clemens.
Hi, thank you for having me. So looking forward to speaking today. Today we'll be providing a breakdown of the blockchain tech stack, and we'll walk through it from an Ethereum perspective and the lens of an institution trying to buy this enterprise grade software, but also from a business network or a software vendor trying to sell the software. So just to give a bit of background about us, my name is Clemens. I'm a solution architect with ConsenSys. I've been implementing enterprise applications, mainly around financial services since 2015. And I'm also joined today by Didier, the Floch, so I'll let him introduce himself.
Hi everyone, Didier Floch. I worked 15 years in banking, in capital markets, on the technical side mostly. I have been in blockchain for about 3-4 years, and I joined ConsenSys 2 years ago, mostly focused initially on large enterprise blockchain projects, and now more specifically focused on digital assets and payment use cases along with crypto use cases.
Great. So for those who don't know the latest, ConsenSys has evolved from kind of the earlier venture studio model into a pure play product software company. So we focus on building protocol infrastructure, developer tools, and top of stack platform applications like Codify. And these products cover PegaSys and Hyperledger Besu, Infura, MetaMask. You'll see some logos down here, Codify. And many of these products also overlap with the specs that are written within the EEA working groups. So today, we wanted to share our experience working with enterprise clients and some lessons learned around building those Ethereum products. So Didier, let's start with the requirements.
Yes, here we go. So I think this section, the purpose of this section is to go through a set of common functional and technical requirements that we see or I've seen in enterprise engagements, enterprise blockchain projects, whether small or big. And unsurprisingly, the pain points, you're probably familiar with some of them, you probably experienced them. A lot of areas, industries, ecosystems still have in some parts antiquated business processes. The excessive reliance on email or manual processes, leading to there's also disconnected data silos that create the need for reconciliation, double entries with potential risk of errors by individuals and therefore slowing down the operational process. We can also talk about slow settlement, so particularly in finance. There are areas where settlement is slow because of these disconnected systems, and potentially also with the creation of additional risk in the system that could be avoided with a better process and technology. And in the worst case scenario, of course, the risk of double spend. There are particularly certain industries that are affected by risks of fraud, where assets are pledged multiple times or ownership is contested. And so these are the pain points, obviously, that enterprise use cases try and target. Usually it's a journey that starts from a lot of what I mentioned earlier, business process that I refer to as business process automation, which essentially is the creation of a single source of data, the ability to share this data with privacy by design, to certify this data, notarize it, and therefore verify it when you're a recipient, and the objective being to create guaranteed consistency of data and records across multiple companies in an ecosystem, and streamline the execution of business processes with real-time event notification and processing. So a lot of use cases starts this way, and then sometimes they start also directly from at the digital asset layer, but this creation of digital assets as token to represent either financial assets or real-world assets often relies on this initial layer of business process automation, and it enables from there to issue assets, service them, settle them in some respects, and have a transparent, immutable registry on the blockchain. And it usually enables the trading of those assets in a new UX to trade assets and potentially increase liquidity via the creation of marketplaces. Finally, the Graal, I would say, for enterprise project is to combine this automation layer with digital assets as tokens and payments to achieve delivery versus payments, and therefore faster settlement, thereby reducing the risk that we mentioned earlier. So, as I mentioned, the best use case, or one of the best use cases certainly of blockchain, is around digital assets, the issuance, starting even before the origination of the asset, the issuance, the servicing, the trading, and the settlement of the assets. What is the value of blockchain there? It enables to create programmable assets with business logic executed on chain that streamlines and accelerates business processes and provides trust and transparency in the assets. They can be natively compliant because of the transparency and the data that is shared on chain, and therefore available to regulator. And you can also embed KYC and AML rules in the assets, in the programmable nature of the assets, which makes them natively compliant. As I mentioned, it's immutable and transparent, so that's an obvious benefit. And from there, combining all those benefits, we can potentially create easier access to those assets by investors that might not have been able to invest in such assets in the current situation. And therefore, it also enables the creation of marketplaces and the improvement of liquidity. So one of the problems now, when we've said that the benefits are obvious, now one of the challenge in the past 2 years, we were at an early stage. 2 years ago, 3 years ago, we were at an early stage when it came to enterprise blockchain still. And it was quite difficult to and costly in the end also to deploy and develop blockchain applications, particularly for complex use cases across complex ecosystems. The technology has evolved very significantly over the past 2 years. Obviously, at the protocol level, there's been a lot of progress. Some of it partly led or certainly influenced by the EA via their work with the technical specification. And also above the protocol layer, we as ConsenSys and other companies have developed middleware layers, blockchain middleware layers and business middleware layers that enable much faster development of application and less costly development, and enable faster go-to-market of those applications. So one of them is blockchain middleware. So it's a combination of managing keys, signing transaction, nonce management, management of gas when it's on public networks, managing the life cycle of blockchain transaction, collecting transactions receipts, decoding receipts, and streaming events to the application layer. So it's really covering all of these layer between the protocol layer and the application, really. So this is a more detailed perspective. It also combines aspects of identity One feature that I'll mention on this slide is multi-tenancy. So we've seen in enterprise blockchain projects very different configurations of networks or topologies. Often large companies in the network will have a dedicated stack that might be deployed on premise in the most secure case. And conversely, you have a lot of small ecosystem players that cannot necessarily or do not need necessarily their own dedicated stack. And therefore, multi-tenancy is an important aspect of the technology that we developed in order to enable small ecosystem participants to participate in the application or the network at an affordable cost. So this is another view of the blockchain middleware that I mentioned before, and other technical middlewares, including the ability to anchor data and provide verifiable proofs of anchoring, and attestation that can be shared from there across between market participants. Everything around, obviously, enterprise requirements like disaster recovery, high availability, so multi-tenancy, I mentioned the ability to monitor it in production. Scalability is another, obviously, very important requirement. I think the idea there is it's developing a POC. You can use it. You can use open source libraries like Web3.js or Ethers.js, but sometimes when you have to deploy for enterprise use cases, you need a whole set of additional requirements that are fairly costly and to achieve. And that's where the blockchain middlewares that I mentioned before facilitates and accelerates the development of the application and reduces the cost. So that is a perspective on this slide of the typical enterprise use case stack, I would say. So at the bottom layer, the protocol layer, either private network using eea-eth or Besu or another client, or Infura to get access to mainnet, for example, or it could be a mainnet node directly. At layer 2, we have the blockchain middleware I mentioned above, very often combined with a messaging layer that enables to share data across the network between companies and between those stacks. And then at the third layer, we have business middlewares that could be what I refer to as business process automation components. So to share data with privacy by design, creates this single source of truth, anchor data, share documents, upload documents, manage documents, and also an important identity layer via a registry of companies, and potentially decentralized identity and verifiable credentials. And then on top, it's the Graal I was referring to before, the combination of digital assets, issuing, managing their lifecycle, trading, servicing, and ideally combined with payment to achieve delivery versus payment. This is a similar perspective, but referring to the product that we developed at ConsenSys. So we have codified assets and codified payments to cover digital assets and payments. When I say digital assets, it could be security tokens or securities. It could be stable coins, it could be loyalty coins, it could be real world assets, it could be shares of funds. We are able to cover a whole range of assets. And the approach that we followed there is the approach of the token taxonomy framework. We rely on 3 different token standards for fungible, non-fungible, and hybrid tokens. So ERC20, ERC721, and ERC1400. And it enables us to cover a wide range of use cases. And then we have this product codified foundation, where the objective here is to cover all of the use cases that I mentioned around business process automation, sharing data, certifying data, and the typical requirements of business process automation. Below that, we have PegaSys Orchestrate, which is the blockchain middleware I mentioned before. And below that, we have various solutions for deployment. So obviously Infura for mainnet, potentially Kaleido as a blockchain as a service platform for private networks, or sometimes we deploy Hyperledger Besu directly on premise. And we obviously, as you might not know, it doesn't appear on this diagram, but we also develop, or at least initially developed Hyperledger Besu, which is now part of Hyperledger and has a vibrant open source community. This is just a different perspective to say that some use require a standalone stack. For example, digital assets use cases for small companies that might run on mainnet would typically require only a single stack. In the most complex projects, it's a decentralized network of such application stacks that are interacting via the blockchain network and the messaging layer I referred earlier. This is a more detailed view of all of the components that you can find in those enterprise stack and that we have at ConsenSys have developed. As I mentioned, layer 1, layer 2, layer 3. So we have layer 3 is mostly business middlewares. And then on top, we can develop custom business logic to serve specific use cases. And we at ConsenSys are mostly focused on the use cases mentioned here. So financial services, payments, and global trade and supply chain.
Great. So I'm going to cover the rest of it. I think we've gone through the application layer as well as the middle layer. And now we can talk a little bit more about the node perspective. So as an institution, running a node as well as managing the network. So I've been working on use cases since 2015 while I was working at R3. So in those early consortium days, we looked at these non-functional requirements for installing the nodes inside of a bank behind their firewalls. And these are really the main components that we looked at, right? So it's security from the data at rest perspective or data in transit. It could be operational security, so management of keys. There's different layers of permissioning and privacy of users and transactions. There's the licensing of the software, so making sure that it's open source and Apache 2 and able to be reusable. Make sure that the language is also compatible when dealing with the internal architecture reviews. So most banks use Java, for example, as a target state language for their global bank architecture. And then other aspects for installing into enterprise, such as supporting different types of support contracts for L1, L2, and different handoff mechanisms. So from here, I think the general specs and compliance from these standards have also been evolving and been signed off. So I believe our spec is at version 4 or 5. So in terms of a high level, I've drawn this out as different tech configurations for each of these layers. So you need this for the DApp layer, for the node layer, as well as the network level. For each of these responsibilities, you also need to onboard, likely manage some type of wallet, likely connect it to different systems and identities, and then create different audit and support levels. So if I'm building a DApp and I care about my end user experience, then I'll look at this top layer here. In most permission network cases, this is the trusted entity, like a bank or a member of the consortium. So I'm connected to that trusted entity. If I'm participating on a node level, rather than purely just this app level above, then I will ultimately also want to connect to the network rules and the network map. So this is just providing permissions for other known parties to connect to the network. And then finally, if I'm participating on a very bottom level from a network governance perspective, I really want to establish the network parameters and the choices for validation and consensus of this network. So these are just high-level views, some key things to think about, and I think popular topics are around key management and custody, the ease of deployment and onboarding of entities, the compatibility with existing legacy systems, any type of private transactions and contracts, and maybe even accessibility from retail users. Are these users already existing accounts from the trusted entity, or are they open to connecting to ERC20 tokens from regular wallets. So since we covered the reusability of the app and middleware layer, let's look at the requirements from a node perspective. From a node point of view, all the software really follows the general, at least within a bank, the software development lifecycle and architecture rules that are usually created by bank policies. And I'm familiar with those, and they're a pain, but they're used to ensure business continuity. So all software web apps usually running within a bank intranet runs with dedicated servers and multiple environments. So you have a dev environment, quality assurance, user acceptance, high availability, or production environments with multiple versions, and disaster recovery in case things go wrong. And so these different servers are set for the base application, and usually they're dedicated servers. So you want to make sure that when you're debugging, you're able to just fail over to another server. And since within software, the node also has a separate identity. This is kind of the complexity of it, is that whatever you're installing on-prem or your identity is provided to you, you will have to connect to other participants through the trusted network. And here you'll have to think about key management and HSM policies, as well as the high availability guarantees, and make sure that there's linear scaling when you connect to other parties. And also, a single node is fairly easy, but now you're connecting some information that requires another node to work with. So you're really creating any type of firewall openings that must be monitored. That traffic usually is reviewed in your demilitarized zone, and especially if it's dealing with direct trading applications. And most of that data that leaves the financial services organizations needs to be reviewed completely. So as where there's new systems that are now, the policies are being created for connecting to cloud providers, I think this is kind of a eventual growth to also connect it to other blockchain systems. On the network side, the connecting institutions will also need to obviously audit that full setup, and maybe there's other organizations that are reviewed so that whenever a new node joins the network, you'll want to be able to make sure that their security level is at the same rigor as yours, because the network is as secure as the weakest node. So there may be requirements for privacy, for confidentiality, for different audit checks for the network to even join the network. At a high level, this is just another view from the node level. So here you can see that each node themselves connects to some message bus, right? Transactions that are being sent have known addresses to a transaction mempool, to reach some consensus by the validators, to create blocks, to distribute those blocks back to organizations. And each of these nodes themselves have multiple environments, as well as their own level of source control and deployment for that application. There is this shared network services layer. I think these are just the needed enterprise known shared components, such as an identity registry. Maybe this is an LEI that's run by Glyph, or an asset registry. Maybe this is a shared CSD between all the participants. And then maybe there's also some type of network ID or registry for all the nodes. So when you send them messages, they're aware of your existence, and kind of you're able to authenticate them. On top of that, you have the entity onboarding. So every new organization, as mentioned before, likely has to go through, and I believe Corda uses the doorman term. So there's a doorman process to enter into the network. Here, if you look at a bank strategy, kind of what is the network compatibility, and how do I prepare if I'm working for a bank? How do I look at my set of capabilities? I would say that it starts off with some level of institutional readiness. So most people start up with projects. What they're really building out is their own internal team, first of all. And then second of all, maybe they'll start a test net, maybe they'll start a community. and then maybe they'll start participating into different projects that solve for these use cases around, maybe it's a permission network at first, but eventually maybe they may look at different types of open networks, so being able to interoperate with mainnet or to communicate with different, I guess, public networks and public communities. This is just a high-level view of what I think institutional readiness looks like. So I want my organization to be able to showcase these existing use cases, to be able to help form new policies around reviewing applications, around network participation, provide some lightweight research strategy, and maybe in a more advanced case, I might be building my own set of custom tools if I'm building something to resell to other participants in that network. And just kind of to drive it home, one last diagram. If you look at your institution and how it connects to other parties, DFMI is just kind of like a decentralized financial market infrastructure. If there are different APIs or different trusted entities that are providing this data, then you will be able to connect your institution to other consortium members and to reuse these open banking APIs. And maybe there is an enterprise SaaS service, or maybe there's a separate business network that you connect to. But these services are how you would interact with either a mainnet application, mainnet, Ethereum mainnet, or open network, or a separate permission network that you've created. Okay, so I think that covers at a high level some of the node and network level ideas. So what did we learn from building with Ethereum for these enterprise clients? I think based on the projects that I've done at ConsenSys as well as at R3, these are working with large enterprise clients. We highly recommend that these two things are true, fairly generically, but one is that there's alignment with stakeholder business value. So making sure your use cases fit and the features that you're aiming to solve are new business value, and also to make sure that you can work with the existing IT team that might be part of a product roadmap rather than just an innovation or digital transformation roadmap. So there's been instances where POC is funded because it's low cost, or it's kind of a method to force the IT team to look for them to build the features that may be unique to blockchain into their existing systems, because it looks like everything that's live and up and running today works and has some ongoing total cost of ownership. But if you want to introduce a net new platform, you likely will have a fairly long journey. It doesn't just you don't just turn off an old platform and start a new one. So what we really tend to focus on, when engaging on these projects, is to look at the high value blockchain specific features, and then to also have the right stakeholder education to know exactly why you're using blockchain for this use case. And eventually you'll need stakeholder buy-in, and hopefully based on successful projects, they come from a lot of different businesses coming together and forming a consortium to say, this is our business value that we want to build, and this is how we hope to solve it with blockchain. So this is just a typical way. I just wanted to walk through with you a standard enterprise path to production for a business network, so for a software vendor. First, you have some revolutionary idea that needs some likely higher specialized developers to build using the framework that's provided. So let's say we've already chosen whichever framework. And then next, you want to deploy to the network. So you need to consider paying a fee for different level of enterprise tools. As mentioned before, usually all the nodes need to have the same level of rigor, so the same installation of base enterprise features. And then from there, maybe you're lucky enough to work with a lot of different financial institutions that want to do a pilot with you. So maybe you get a few, 5 to 10 institutions that cover multiple roles. And with blockchain, you kind of need all of these parties involved. It's not a silo system. And then you run a pilot, and you may be successful, you may be fundraising along that time. And then when you're thinking about, pushing to production, you'll have to think about, what network am I going to connect to? So what are the network services that I'll need? Do I need to build my own network from scratch? Do I need to run all the validators myself? And then in doing this research, I think most people, when they're running this business network, start to face a lot of pressure because they've done a pilot and now they want to push to production. And so that next step is to make a decision to maybe run all of the nodes. And this is a tough thing to do, but it does solve for, if it's all on a web service anyway, if it's an API, if it's all in AWS or Azure, then it kind of looks the same as a web UI. And then maybe you want to also then determine, how do I deploy my software to each of these nodes? And this is, again, a little bit harder to support when it comes to blockchain or distributed ledger technology, is that every piece of software needs to be backwards compatible and updated at the same time. So you have to find out the best way to push your deployments to those nodes. And then from there, at the end of the day, it looks like to the business side, maybe it's a web UI that they're able to use. Maybe at the back end, there's a lot more streamlined set of processes, but maybe to the front end, to the business value, it still looks like a web UI. And so I wanted to bring up this point because it does add some level of frustration. We've gone through this a lot of times. We want the application to solve for the business problem, and then you run into, well, now I have these nodes and I'm running the nodes. I need to train and license different parties and hopefully help them migrate so that you have this vision of a shared set of network services. And so one of the hardships is that you usually start to push this further and further down the roadmap, which is all parties will run their own nodes and be able to connect to them equally and be able to build their own tools around them. And so I'll revisit that with kind of the streamlined perspective. Just at a high level, I've seen the different type of layers that I talked about before. So you start off with a wallet, which is kind of your user experience, your keys, your identity. There might be some third-party services. So maybe connecting to different data or API, or maybe you're using Wire for fiat on-ramps. Then you work with your business network or your sales, your software vendor. From there, you would think about your own node or the client that you would run to install that enterprise set of components. And then from there, the node's interaction with the global network itself. So that might be via network services. Then there's infrastructure, which could be running cloud or on-prem. And then finally, you have your legal and governance aspects that govern your SLAs for your software as well as for the network itself. And what I wanted to show here is that there's really two levels of access. There's a clear split, right? And so if you think about the app level, that is the Web 2 tech that people are familiar with and kind of they can grasp in their head as a website. And here it's because they trust the software provider to give them with the onboarding of username, passwords, that's all local to the application. At some point, you'll need to connect that if you're using Ethereum to the public Ethereum addresses and whatnot for app level accounts. And then behind that, there's this node level. So node level participation is really within a permission network, the ownership of hosting and deploying that software. And perhaps you want to do this because you have more flexibility and granularity, and maybe you want to build different applications that you can sell to other participants in your permission network. And I think this is still valuable and valid. You may be able to influence the criteria for the network of who's joining, of the applications that are deployed on there. So you're kind of creating your own financial app store. The feedback that we've gotten, or kind of just general I guess, difficulties in building large applications coordinated across multiple institutions is that the business case, after a long time of going through the process, it gets harder and harder to think about node ownership. It's seen at the bottom line as a number. And so, for example, the responsibility of doing governance negotiations adds up in legal fees. When you're joining separate network foundations, maybe there's membership fees for that, buying enterprise licenses, and then hiring a team to support it, and then buying software support. So there's just a lot of additional costs that maybe the business case doesn't always add up to. And it's just as a lesson learned to think about, to make sure that what you're building, it might be the next Swift, it might be kind of this kind of co-owned financial services application. But if that's true, it does need to have a significant amount of buy-in from all the parties. And kind of, on the other end, on the app level, if you have this trusted endpoint and if you signed up for the SLAs with the business network, then maybe the app level, your role-based access control for UI streams or for updates to your database locally, or even updates to the blockchain layer for settlement and kind of ultimate beneficial ownership, different user types, all of those may still be looked at from a layer, app layer perspective. Most of the business network, for example, that would be likely through API developer access as usual. Another perspective I mentioned before is that maybe all business networks are running the nodes on behalf of the other party, and they run into issues when they try to migrate that ownership, and it requires a long training cycle, or some organizations maybe don't want to run nodes or haven't evolved their policies to get to a point where they can run those nodes. And then from a business network perspective, some institutional users of the software may find a cleaner way of investing into the future success of the tech. So maybe they're negotiating co-ownership or equity in the tech company rather than thinking about running a node or worrying about the support software themselves. And lastly, I think the idea around building an application and building different tools around it is the right way to think about this tech to get to the Holy Grail. But a consortium member that builds their own application may also face issues of vendor lock-in or not wanting to buy software from other parties. There hasn't really been a good implementation of a permission network dApp store. It's always gone through the business network because it's complicated when you start to build multiple layers, and maybe if there's a failure in one application, you don't want to fail other applications. And then from a node level, this is something that we had discussed in the early days at R3, is that new edge of truth. So if everything works out right and you have every institution running a node, your internal view would then still need to reconcile with this node. And you're just continuously moving this edge of truth. So there may be a centralized dependency internally with the node that you've created. You may need to sync your systems with that service, and that might also be significantly expensive. And then ultimately, when you look at the interim state, so in the life cycle of an application that you've onboarded, the idea is to reduce your total cost of ownership. So this may temporarily go up because you have this interim state running 2 applications in production, which needs to be calculated in your return on investment. So, this isn't like a large sales cycle for mainnet, but I wanted to bring it up that I think there is more straightforward and significant, cost-effective routes to production with mainnet. I think that there are already quite a bit of live enterprise applications on Ethereum, on blockchains in general, but I personally, just from a startup perspective, thinking about it as an entrepreneur, choose mainnet, choose the DeFi protocols, and as a first step. So in comparison, you have a lot fewer steps from the first path. And then here I've just kind of highlighted that likely you want some level of smart contract auditing or bug bounty, which you would have in the other view. Maybe there's predefined products or APIs that you can use off the shelf. And then the difficulty here, and this is probably the biggest reason why institutions are less willing to deploy on mainnet, is eeth and kind of the usage for gas for operation, as well as the tax implications and regulatory implications of having that currency be used as accessing the application. This is just kind of a quick plug of Eminent as well as different projects over the past 12 months that we've seen this intention of enterprises and governments transitioning from private to public Ethereum. And it was impossible a few short years ago, but I think a lot of work has been done with privacy layers. A lot of work has been done all around to connect to existing systems to make sure that there is a single source of truth, but there's also an agreement to that truth, and maybe less replacement of legacy systems, but additions of plugins that allow them to sync. On a higher level, I think the market trajectory, there is a clear crypto maturity curve that started off with this data and workflow with enterprise use cases and financial instrument tokenization. But I think the really interesting evolutions kind of retrofit into tokens or retrofit into moving business logic within the network. And then those protocols allow for a broader universal access to the financial economy. And finally, just as high level view of blockchain ecosystems, we at ConsenSys, do feel that they are converging around Ethereum from the enterprise perspective, but also from the startup world. And we believe that, there is a growing set of traction for disruption rather than purely just operational efficiency gains. Okay, so I did a lot of talking, and I think I covered quite a bit of material. We are open to questions.
It looks like we have one question, and it was, will you share the presentation deck?
Sure, I think we can share.
Yes, we can, of course.
Okay, perfect. If you'll send me, you can send that to me and I can post it to our members and also send it out as well. Currently, that is the only question in the question box. If anybody has questions at this time, please feel free to go ahead and write your question in the question box and we can read it out loud.
As the questions come in, Didier, you've had significant experience with building Comgo and kind of having a live application. Do you want to talk about that and any lessons learned from that experience?
Yeah, sure. I think the lessons learned are, there are numerous lessons learned. I think it's very important to focus on a small scope MVP when you go live and try and extract or find the smaller scope of MVP that delivers the maximum business value. And it's not an easy exercise. So that's an important point. Integration with legacy system is a challenge. It takes time. So that's just a fact of life. I don't know if it's a lesson learned, but it's just a fact, and it's I think trying to reduce the friction of integration is maybe a lesson. I think the speed of onboarding participants to an ecosystem is also a lesson. That's the obvious appeal of mainnet, because by being an open network, you don't necessarily have to do gatekeeping. you don't necessarily have an ecosystem manager that will handle the gatekeeping and the onboarding of companies to the ecosystem, and that's actually a huge benefit because this onboarding creates in and of itself some friction. Mainnet is also has the benefit of being a free infrastructure. So most of our enterprise use case still are on private networks because people are often more comfortable deploying applications on private network. However, the challenge sometimes with private networks is that when you run a dedicated network for a single application, there is a cost of infrastructure that comes with it. And that is not mutualized because you're in that private ecosystem. Whereas using mainnet or another public network, it creates the opportunity of deploying a large number of applications on the same infrastructure and mutualize the cost. So that's another important one. I think also in terms of use cases, as I mentioned, often it starts with some degree of business process automation or data exchange, etc. But the real more compelling use cases for blockchain are beyond that, with digital assets and payment and delivery versus payment. So I think bearing in mind I think it's important to be focused on the short term to deliver value quickly with MVP, and at the same time enable the delivery of that vision of digitizing assets and payments and leveraging the technology to its maximum potential. So these would be the main benefits. Another one I should mention actually is, so that's a natural friction that exists in a lot of enterprise projects, is deploying on-premise is doable, but obviously takes time. So I think starting with a solution in the cloud, deployed in the cloud is the obvious starting point to reduce those frictions, and again trying to create business value in the short term as soon as you go live with the solution. So these are for production use cases. I think for people who've never experienced too much with the technology, starting with a small scale POC is often a good idea. We have tooling basically with all those components to enable quick implementation of POC, and relatively certainly much cheaper than it was some years ago. And I think you can then take it from there, go from POC to small scope MVP, and then from there expand. So there's a journey now that is that we know very well, and we know how to take people on that journey, and that's probably the right journey to take things step by step, and with cost for every additional cost at each step should be matched by the degree of benefit. So maybe the POC just the education of learning about blockchain and learning about its potential and how it can apply to your business. Then when you get to MVP, you start quickly generating business value. So I think compared to before, a lot of companies were believing in the value of the technology itself. Or a lot of initial early stage POC, I would say, a few years ago, were probably too focused on the technology and not maybe focused enough on the business value that it is meant to create. So I think it's finding that balance between it's using the technology as a tool as opposed to the technology being the end objective of the effort. So in the end, the technology is there to support business cases, use cases, and generate business value.
That's a good answer. Do you have any advice for institutions that might be running this software, and kind of what should they be doing? I mentioned, thinking about policies or thinking about building their own communities. Do you have any other additions to that?
Yeah, I mean, there are plenty of things you can do as an institution to engage. So if you're already running this kind of infrastructure on premise, for example, or even in the cloud, I think you'll probably have learned that it's not easy to run a blockchain node sometimes. So I think we are also having solutions around managing nodes on premise and providing support for people to help companies run this type of infrastructure, because it's a little bit different than the Web 2 application infrastructure. I think engaging or encouraging developers to engage with the ecosystem and the community. That's the huge power of organizations like EEA and communities like Enterprise Alliance and Ethereum more broadly to enable like really a huge amount of innovation, participation. Like everything is open, anybody can participate, and I think it's great to have developers in-house participating in open source development of certain technology. I mean, even as I mentioned, Hyperledger Besu is an open source Ethereum client developed in Java, so it was designed and developed in a way that is meant to attract developers from enterprise to contribute. So I would encourage people to just have a look and engage. Yeah, these are the main thoughts I have at this point.
Okay. It looks like we have 3 questions from the audience. The first is coming from Wayne Chin, asking, how much does it cost?
Yeah, it's a good point. So Clemens is playing with Snapchat, I believe. So how much does it cost? It's a very good point. So I think I'm going to give you broad ranges, right? So if you want to develop, like test a use case, like where we have products off the shelf, like for example, we have a digital asset platform. You can issue digital asset, KYC investors. You can then there can be interaction between the issuer and the investor on the platform, and it's adaptable to tons of use cases of financial assets or real world assets or loyalty coins or crowdfunding use cases, etc. So this is a product off the shelf. You can, I mean, I'm going to give a broad ballpark, but between 60K to 100 something K, you can have a full-fledged use case working. Then if your use case is more specific to your specific business, then there is a degree of development that is required above the components that I mentioned earlier. So a good pilot POC might be a bit more expensive, in the ballpark of, I don't know, $150,000 to $250,000 something. And then from there, taking such a POC. So the way we do POCs now is very different than a few years ago. Now we're really, by using the components that we already have, the objective is to enable people to go from POC to MVP at a reasonable cost. So what we build for POC is totally reusable for MVP. However, of course, you have the cost of making the infrastructure production grade when you go to MVP and adding functionalities that are maybe more compelling than in the POC. So an MVP could be, so it depends. It could be a few hundred Ks to multiple $1 million if you're really building a huge platform. And then from there, running the infrastructure has a cost, but again, if you're using mainnet, obviously you're benefiting from free infrastructure. If you're running on a private network, I think the idea is to create the condition that it's that the cost of running infrastructure is much lower than the business value that you create with your use case. So, and that's always what we are trying to achieve. So I think I can't answer the exact question, but I'm trying to give you some ballpark. And if you want to have more detail, please feel free to reach out to us and talk to us about use cases. We can give you more details.
Yeah, I would add that the cost to the software provider is probably less than the cost is for the institution adopting it, even though it could be either or. But within a permission network, you think about the support contract as well as the people you need to hire to maintain a node within a permission network. That could go up fairly quickly, and that's why when you decide on which distributed ledger platform to use, you kind of go all in on building on it. And then on the other end, I would say that for startups, I've seen a lot more smaller startups building for enterprise use cases using mainnet just because it is free infrastructure and there's so many tools out there.
Thank you.
We are. Yeah, one thing I would say is that we can equally deploy our solution on mainnet or private networks. So.
Okay. Thank you. We have two more questions. The next is from George Floch. I didn't see quorum on your slide. I heard that ConsenSys may take over support for quorum. Any insights?
Yeah, I'm sure you read some news from a few months ago, so that I suppose that's where the question comes in. To be honest, it doesn't. I mean, we use quorum. We have deployed projects in production using quorum. We have historically provided support for quorum. So we also have our own Ethereum client, Besu, that is open source as well. We are perfectly happy to use either client. It's often the client, the customer himself that sometimes has a preference. But do we, I mean, I can definitely confirm that over the past few years, we have deployed solutions with quorum equally, and now Besu as well. So we support those basically. We've always supported those.
All right, thank you. Our last question is from Dennis Scott. It says, I work for a construction contractor who's looking into Hyperledger for private blockchain. What are the key selling points for enterprise for using a public blockchain over private?
I think one of the main selling point is, I think two selling points, right? Cost is important because mainnet is a free infrastructure. So that's a huge benefit, like I mentioned before. If you have a private ecosystem, the only challenge is often you're going to have a dedicated network for a specific application, and this application will have to bear the cost of that infrastructure, which can be totally fine, but is more costly than if you were going on mainnet. So, and the other aspect that comes with it is just the fact that it's an open ecosystem, and therefore you don't have the frictions of onboarding and gatekeeping and the rest of it. So I think, and more, I think what the message that is important to pass today is to say more and more enterprise are open to the idea of going to mainnet. The baseline initiative is an illustration of that. We have seen last year famous examples of banks, Santander and SocGen, others, issuing bonds on mainnet to experiment the use of mainnet to issue assets. So I think the feedback is that it probably will take some more time in some cases, but the interest to deploy applications on mainnet by enterprise is definitely growing.
Okay, well, thank you. Looks like that wraps up our questions. We are at 1:32, and so we're right on time. So thank you both, Clemens and Didier, for joining us today. And if you joined the webinar, please feel free to, please feel free to place your social media handles in the chat so all attendees can follow your work.
Yes, absolutely.
Thank you. If you're more interested in all the leading blockchain work going on in EEA, please feel free to reach out to our membership director, Jack Lee, or send an email to membership@entethalliance.org. Again, that's membership@entethalliance.org. And thank you, everyone. This concludes today's EEA Education Series webinar.
Thank you very much for the opportunity. Thank you, everyone.